Before starting the video, click the subscribe button and turn on the notification bell. Hello everyone and welcome to House of Commerce. Hope you all are doing well. So today we are to discuss about some theory and some of the accounting concepts which will help you in solving the accounting and which will help you in understand the accounting concepts better. So watch the video till end and let's take a look about the concepts. So let us take a look at the list to be discussed in this video. So accounting concepts: accrual basis, completeness, relevance, faithful representation, materiality, prudence, going concern basis, and substance over form. Yes, we are gonna discuss about all these topics in this video. So stay tuned. Accrual basis or matching concept. Accrual basis accounting says that an expense should be recorded in the period in which it is incurred, no matter it is paid or not, and the income should be recorded in the same period when it is earned, no matter it is received or not. So the same expense and revenue should be accounted for in the period to which it belongs, and not when they are received or paid. Then the cost of sale in the statement of comprehensive income must be matched with the sales. Income and matching expenses must be reported in the same financial period. In other words, when the revenue is recognized from sales, then the cost must also be recognized in the same accounting period. Other expenses should be charged in the period to which they relate, and not the period in which they are paid. So this is the thing, that in accrual basis or matching concept, you should account for all the incomes and expenses to which they belong, and not when they are received or paid. So hope you have got the idea about matching concept and accrual basis. Consistency. The content of the financial statements must be presented consistently from one period to the next. The presentation can be changed only if necessary to improve the quality of information presented in terms of its usefulness to the users, or if a new rule requires a change. For example, if a company is using a straight line method to depreciate the machinery, so in the next period it should use the same method until and unless the authorities or the users require so. If the auditor says or any of the authority says to change the rule, to change the method, so it shall change the method and not by itself. So consistency requires the company to use the same method as it was used in the last one. Completeness. The objective of financial reporting is to provide useful information. Information is only useful if a person can rely on it. To be reliable, information should be complete, subject to materiality and cost. Now, the objective of financial reporting is to provide all the information regarding the company and regarding the operations to the users of the financial statements. Now the users include customers, shareholders, and all. One thing you have to keep in knowledge, that all the users are not always the persons involved in the operations of the company. They can be outsiders. So to provide them the information and to get them rely on it, the information must be complete so that it may be easy for them to understand that what is written in the information and what is being expounded to them. Completeness refers to whether all the transactions that occurred during the period have been recorded. So completeness means that all the transactions, all the operations should be recorded properly and as it were incurred, so that it may be easy for the users to understand that. Then relevance. Information must be relevant, capable of making a difference in the decision by the users. Information is relevant if it can be used for predictive and or confirmatory purposes. So, it has predictive value if it helps users to predict what might happen in the future. So, the users can predict the future purposes of the company having seen the past track record. Or, it has a confirmatory value if it helps the users to confirm the assessment and predictions that have made in the past. So, if the users have the past financial statements or past reports of the company, so it can confirm that whatever the company is saying in the current year, so can it be possible to achieve that in the future or in the current year. So it can help the users to confirm having seen the past reports. So below given example says the same, that revenue of the current year can help the users to predict about the future consistency or future development of the company, and the past year can confirm that what company can earn in the current year. So this is what relevance is all about. Faithful representation. Financial statements should give a true and fair view of the financial position. So, financial performance and changes in the financial position of an entity, and other way of saying that is, financial statement should provide a faithful representation of these. So, along with the relevance, the financial statement should also be faithful and present the faithful representation of all the accounts which are useful for the users. So, what are the conditions of being faithful? Let's take a look. A perfectly faithful representation would have three characteristics. It would be complete. Complete means the depiction includes all information necessary for a user to understand the phenomena being depicted, including all necessary descriptions and explanations. So, it should record all the transaction and it should depict all the things along with the logic and with the complete proofs that what the company actually wants. Then, neutral. The depiction is without bias in the selection or presentation of the financial information. So it must not be in the favor of ones. It must not be used to favor someone. It should be neutral and in the interest of the shareholders and the users. Free from error. Where there are no errors or omissions in the description of the phenomenon and the process used to produce the reported information has been selected and applied with no errors in the process. So, along with the completeness and being neutral, the financial information should also be free from errors so that it must not be accounted for as fraudulent, and it must be useful for the users to take any decision. So this is what faithful representation is all about. Prudence concept. Financial statement must sometimes recognize the uncertainty in the business transactions. For example, if a business is owed 1 million from a number of customers, there are some uncertainty as to whether all the money will actually be collected or not. So all you guys know about the bad debts or doubtful debts. So, what are these doubtful debts? As we have discussed before in our other lectures, that bad debt allowance for bad debt is just an estimate and not the actual uncollectibles. So, the company records it as an estimate due to the prudence concept that if it will not be received in the future in actual, so it shall not harm the budget of the company. So this is the reason that prudence concept requires the company to record the bad debts or such expenses before the occurrence of them and due to uncertainty. And if the company has to record the asset, so the asset must be reliably measurable and it is probable and if it is relevant chances or reliable chances that the asset will be with the company's ownership, so it shall record the assets then. But in the case of expenses, if it is less than the 50%, so company shall record it even though they are incurred or not. Going concern basis. This means the financial statements are prepared on the assumption that the entity will continue to operate for the foreseeable future and does not intend to go into nor will be forced into liquidation. The going concern assumption is particularly relevant for the valuation of the assets. So, what is foreseeable here? The question arises. So, foreseeable means at least 12 months or more than 12 months. So, at least 12 months is the foreseeable future, means till the next presentation of the financial statement, the entity shall survive. But if it is less than that 12 months and the entity's track record says that it shall not continue till the next financial statement presentation, so this entity is not up to the going concern basis. So the valuation of the assets shall be different as they are reported in the financial statements. So they shall be sold up to their values that were decided before on the liquidation process. Substance over form. The use of the term faithful representation, as we have discussed before, means other than that the amount in the financial statement should be materially correct. It implies that information should present clearly the transactions and other events that it is intended to represent. To provide a faithful representation, financial information must account for transactions and other events in a way that reflects their substance and economic reality. In other words, their true commercial impact rather than their legal form. If there is a difference between economic substance and legal form, the financial information should represent the economic substance. So what does this mean? That substance form and the legal form. For example, if you have taken anything on lease and you have taken more than the 75% of its life on lease, so that asset in accounting terms belongs to you until and unless you haven't returned it to the same person after its total life of the lease. So this will be recorded into your books, although it belongs to the person who owns it. So who has the ownership is different person, and who has taken it for 75% of the life is different. So there is a legal form that person belongs, that person holds the asset and that person owns the asset, and there is a substance form that we have recorded it in our books. So this creates a difference between substance and legal form. Therefore, the accounting says to record it in its substance form that it belongs to you. that you are using more than 75% of its life. So that was all for today's lecture. If you have any query, you can put into the comment section, and we will make its part 2 as well, where we will solve the questions. Till then, good luck.